Hi-ho, everyone, and welcome aboard. Welcome to the weekly Sunday market update, where, of course, as always, we whiz around the world and have a wonderful weekly preview and / review with our senior traders from Actions to Wealth. And we'll be going, where are we going tonight? We're going to the UK, we're going to Singapore twice, and of course, I'm coming to you from Tasmania in Australia. I've got to say, it's a very, very windy and wet Tasmania in Australia at this very moment. Before we get into what the traders are thinking for the week ahead, let's have a very, very quick squiz at what happened throughout the previous 7 days. And that's pretty much highlights of the data releases throughout the week. Inflation figures coming out of the US. And pardon me, bit of a mixed bag with that and the economic data coming out of the UK. Consumer sentiment is up in the US. Wow, strange people. Anyway, it is what it is, and we'll have a look and see what the markets actually did as a result of some of that. The oil price rallied and then came off its high at that breakout level, really, at the end of the day. Interesting candle, that one from oil. The NASDAQ continued its rally and ended on its high, as did the S&P 500. Big weekly bars there on the S&P, and have we turned the corner? Don't know. But certainly the indexes are suggesting the same. Again, you've got silver closing on its high, and you've got oil closing on its high pretty much as well. Sorry, not oil, gold. That's that gold stuff. Still a little bit of work to do for gold to get into the clear here, but looking very, very promising. I'm wondering if we're due a pullback on that. Anyway, the dollar. Dollar came off its lows and closed above, I guess, the most significant recent level, which is a little bit of support through here. Again, bearish bar, or is it? We'll see. There may be a bounce here and it goes along. I'm not here to tell you what I think. We are here to listen to our very favourites on fundamentals first up. And it's a very, very good evening. It is evening, of course, in Singapore, to Lexi. Hi, Lexi.
Hi, Geoff. Yes, and it's evening here. It's almost time for dinner.
Oh, me too. I'm having late dinner. What's
right.
going on around the world, mate? What should we be focusing on for the coming week?
All right. It's interesting stuff, I think, last week. So I'm going to share my screen and we are going to talk a little bit about China. So in the headlines, we have the US sentiment beating forecast. I think the New Zealand inflation rate has popped down a tad, a kind of tiny bit. And I'm looking at a couple of interesting stuff that's happening over next week. So I think the currencies, the stronger currencies I am looking at, I'm still on the bias of a long Swiss, but I think there's retracements in order because the Swiss, in terms of its data, has been pretty stable, has been pretty steady. But I think in the wake of the US inflation dropping down, I think there's a little bit more risk on sentiment, which means we might see money flow out of the Swiss as, some people find a little bit more confidence that the high interest rates in the US are working and inflation actually is moving. Whether or not it's a fluke, we'll have to see the next inflation reading. But I think what really interests me is the China, the China numbers. So over here, you can see the China inflation actually rose 0.2. So being the 2% inflation rate and only going up 2.7, it actually is a good thing for China if activities are coming up. So we can see in this little inflation rate right up here, what's interesting is we are looking at non-food inflation slow. All right, so prices are kind of stabilizing for non-food stuff. We have food prices increasing. We have costs increasing for transportation and communication. And, the question I think we all are thinking of is whether or not China is ready to recover. But, with a little bit of movement in China, whether or not it's an actual recovery, I guess we still have to be a bit patient to see. China is facing a bunch of debt issues, all right, across the world as everybody, the economies that are affected by the Belt and Rail projects, I guess they are kind of in trouble over there. But my concern is if China starts to activate, right, what I am looking for is to see whether there is any push for the Kiwi. All right. So why the Kiwi? The Kiwi's top trade in terms of the Kiwi. In terms of its top trading partners, you can see that New Zealand actually has 32.6% in terms of trading relationships with China. So if China starts to move up, I think it will help the Kiwi economy be bolstered as well. And when we look at the charts, all right, if we look at some of the Kiwi pairs, we can see a lot of strength has been coming into the Kiwi pairs over the last week. We have a bit of a pop of the Kiwi, all right. So I am looking at hopefully trading the continuation of this pop-ups. But of course, the currency pairs I'm trading it against will be the weaker currencies like the euro and the Japanese yen, all right. So the Japanese yen has had a nice retracement in terms of its currency pairs in the last 1.5 weeks. But what I am thinking, it is a kind of a retracement because the Bank of Japan has not said that it will be changing its policies at this point. So if the Bank of Japan has not changed its stance, it means that it is still pushing for a weaker yen. I think this pop in the Japanese yen is probably a retracement pop. And I am looking for re-entries into a continued short of the Japanese yen. As long as Japan doesn't change its stance, I will be short on the yen. The challenge now that because it is in an overextended region, it's about finding that entries we can go in. So next week, I'm looking at pairs like the Kiwi yen, the Euro Kiwi, I think the other currency that I'm a bit more comfortable trading towards the long side would be maybe the Swiss yen and Euro Swiss. All right. But again, these are very overextended currencies. All right. If you look at the Euro Swiss, you can see fundamentally, it kind of has a bit of leaks, but technically we are at a very overextended region. So you can see the Euro Swiss on the daily time frame, it is hitting the bottoms of this area. So I suspect that before price goes into continuation, it's going to go into a range for a while the market decides whether or not the euro is still worth shorting. All right, so I think these levels are going to be a turning point. Because the moment these prices are broken, we are going to see a change in economic structure for the euro. Okay, the euro hasn't been doing well for a while, partly due to the conflict in Ukraine. It is affecting the economy in the region. All right, so this is at a very interesting place. I am very wary of long euros at this point. All right. Because I think fundamentally the numbers still do not look as good. They still have the highest unemployment numbers comparatively in the region, as well as high inflation. So that can't be really good for the economy at this point. So I am looking continued shorts on the euro, but I think for these currencies that are overextended, we'll probably do well to be patient, to wait for the pullbacks before re-entering in those positions. All right. So Swiss yen. Finally did move in the last 2 weeks, and again it's reaching horizontal levels. So again, I probably would want to wait for a bit more pullbacks before continuing to trade pairs like this. And again, if we zoom out all the way, you can see these are very overextended pairs. So while the potential for longs from a fundamental point is there, I think the technical traders here will be hard pressed wanting to continue long. So I think it's going to be a bit more consolidation, a bit more decision making, a bit more clarity needed from the market before we continue on this long trajectory. Or at least from a technical standpoint, I would rather wait for a break and retest of maybe this levels, either this trend line or this horizontal levels before wanting to continue to long it. All right, so just be a bit patient on the entries over here so that we're not too premature. Alternatively, if price really does pull back to levels over here or levels over here, I would be happy to look for long re-entries in the Swiss yen. So that's all for me. I am looking for longs, the Swiss and the Kiwi, and shorts, the euro and the Japanese yen. That's all I have, Geoff.
Awesome, Nixie. Thank you very much indeed. Interesting that yen, it of course has been out of favour for a very, very long time.
Yeah.
For reasons, of course, that are fairly obvious. I had a little bit of a rally there a couple of weeks ago, but gee, it hasn't lasted too long, has it? And I'll be interested to see if those can pop back through the highs there in the Swiss franc and others, as you mentioned. Thank you, mate. Have a great week ahead, and we look forward to catching up very, very soon. All right, let's swing our attention away from Singapore for a tick and go across the waters and say a very, very good morning in his case to my trading buddy. G'day, Ash. How are you, mate?
Hi, mate. How's things?
Look, top of the world, mate. You know what it's like. Sunday evening. Don't have to do too much.
Yeah.
How's things in your part of the world? Still sweating?
Oh, beautiful, mate. Absolutely. I mean, it's, the summer's been incredible this year. It's been so nice. So, yeah, like you, mate, can't complain.
It's all right if you're living on the beach and you got some nice sea breeze coming in your window. The people in London wouldn't agree with you, I don't think.
No, they wouldn't. Anyway, mate, let's get to the data now. Interesting, sort of like hearing that conversation with Lexi, and you and I know from looking at the markets on a weekly basis that it's been a bit surprising. What's really happened over the last few weeks with some of the data kind of suggesting that that we would see the rally kind of going on. The fact that we get sort of slightly better inflation data and the equities start to rally, so risk comes back on the table. Bit of a shocker when you sort of realise that inflation is still at 8.5%.
Yes,
whether the market kind of like wakes up from its euphoria this week, or whether it continues, is the big question. And we were just talking about the yen there. The yen's a really interesting one. So let's have a quick look at what the seasonal data says to start with, because really, with the risk on attitude, you would not want to trade the yen by any stretch. You wouldn't want to be trading the yen long. But if we look at the seasonals, look at this. Now I'm going to show you all of them to start with. Swiss franc. Now this is the August to September month, relatively flat against the dollar. New Zealand dollar, weaker against the dollar. Japanese yen, stronger against the dollar. Mexican peso will miss. Euro, weaker against the dollar. The pound again is a little bit up and down. Canadian dollar is relatively flat, and the Aussie is also weaker against the dollar. So really, we're looking at yen's strength and potentially euro weakness. Now, if we have a look at that, see what that looks. See what that looks like with a euro yen cross. Then what we get is the euro as weak as this is August here. Euro much weaker against the yen. Sorry, I can see that my screen's taking a little while to kind of catch up with you. So this is the euro, much weaker against the yen. So you can see that the August month there, and the way that the chart is going. Now, the reason I'm bringing that up is that if we look at the COT data against, and we compare the COT data from the yen to the euro, what we see here is these are the non-commercials, and the non-commercials tend to have kind of tied to stop. So they tend to be better at predicting when the market's turning. Look at what we're starting to see. This is the net position. Now, the net position is the best it's been. It's still not net long, but it's the best it's been on the yen all year. We're starting to see sort of like positions start to come back in. We're starting to see, the COT data start to come back in for the yen. And if we compare that against the euro, let's blow this chart up a little bit. Then we can see that, okay, it's improving a little bit, but we're still really in negative territory. So that does sort of like pair the yen against the euro quite well. It does actually pair it, if we look at the Aussie, because that was one of the other ones that was weak, look at that with the Aussie as well. Now, this is really interesting because the Aussie yen was also seasonally a short, and we do actually see sort of like weakness stepping into the play with the Aussie. If we were to kind of bring in the chart and we were to think about the Aussie yen on the chart, look at the chart on the Aussie yen, very, very close to resistance point here, if not right on top of it. So there is a case to be made to say that this could well turn around. The issue is the risk on, risk off that we've got. So we've had risk on all week, for the last few days, actually. Last few weeks, we've had risk on. NASDAQ coming back, S&P coming back, FTSE coming back. So the indices are coming back, suggesting that we're not really in a risk off attitude. But this is suggesting that we should wait and see whether that might turn around. The difference with the Aussie yen and the euro yen is that the euro yen is actually trending lower, and it does actually have some resistance point here. It might pop a little bit to start with, but it does suggest that there is some downside to come on the euro yen. So I'm actually on the flip position where, and it pains me to say, because why you'd buy the yen, I don't know fundamentally, except for the fact that central banks may be not pivoting positions, but easing back on their monetary stance. So they're not going to aggressively raise rates as much as they have been. Inflation starts to come down. Does that encourage the Eurozone to put the brakes on what they were doing as well? Lexi quite rightly pointed out, the Euro economy is in all sorts of trouble. They don't want to raise interest rates. They can't really. So if they're not going to do that, does the yen's valuation catch up by default with one not moving and the other one staying really where they were already? So euro yen short is an option. Aussie yen short, but we do need to see that risk off come back into the market before we take that position. So cotton seasonal suggests yen long, cotton seasonal suggests Aussie short and euro short. And it's kind of pick your poison for which one you'd go for. I would personally plump for the euro yen short out of the two until I saw risk off come back into the market. And we need a driver, and it's not there yet.
And of course, the other thing, Ash, with the yen is they just can't sell it off forever. That doesn't happen. Markets don't work that way.
No, absolutely right, mate. And I guess this is the point: is that even though the fundamentals are weak for the yen, aren't particularly strong for the yen, and we know the central bank isn't moving, that valuation can actually come back into play by default with the other central banks moving back towards where the yen position is, which is not easing necessarily, but certainly not tightening at quite the same rate. And the euro, okay, started a little bit of tightening, but can it keep going further? I mean, we got this big problem right now in Germany with the river just evaporating. So they can't get the energy that they need, the coal that they need to get. They can't use the autobahn, they can't use the trains because they're already full with goods already. So they need the river to kind of transport the goods up the river, and they can't do that because it's just not deep enough. So that compounds again the problem that they got with energy. So the Eurozone is in all sorts of trouble, and for that reason, as I say, they might come back into line. And realize that they can't continue to raise interest rates because the economy is in a mess, whereas the Japanese economy is bubbling along okay with their particular monetary policy position.
All right, well, we can focus on that particular scenario as the week progresses, I suppose. So you've given your positions for the week. So to, of course, has Lexi. Let's see how they pan out. Mate, I'll catch you tomorrow, right?
You certainly will, mate. Yeah, bright and early. I'll see you at 5 to 8 UK time.
You don't be late, right?
Don't be late.
Okay. Well, thanks to Ash. As usual, we have a little bit of fun there. Talking about tomorrow, of course, Ash and I do it every Monday and Thursday at that time, 5 to 8. That, of course, is 5 minutes before London opens. All right, we're going to go back to Singapore now, and the man who measures relative currency strength like no other. Here's Lloyd.
Okay, hi everybody. So this is welcome to the currency index analysis. There's been some changes to the currency, and not much, but I'm just happy to see that a while back while I was doing analysis, some of the currency indeed did take off. Now, first, chief of all will be the Canadian index. It will be the same as what I've analyzed, I think, 3 weeks back. Yep. So you can see that price has indeed very, very strong rejection, bring above the horizontal level, and seems to be heading back up to this top of the range. Yeah, so there's still plenty of space for CAT to actually strengthen itself. That's a good thing. Yeah, we can actually long the currency if we want. Yeah, so you'll be the strongest in my list. The next on my list will actually be Kiwi. So again, Kiwi, very similar behavior as the cat. You can see that after a very nice rejection, basically it broke above the horizontal level. It seems to be heading back up. Now, the upside potential for this isn't as much as the cat. I would say I would get somewhere is here, but still there's plenty of space. I would say about 64 to about 65, $1 for it to travel. Yeah, so for the lower time frame, there's still some space for us to actually inch in. So keep a lookout for the Kiwi and the cat currencies. Now the Aussie, I'm not as confident. Yeah, overall, if you look at the structure, it's still showing us high, 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 low, high, 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 low. It seems to be printing a very potential reversal point before it hits down again. Now, on saying that, overall, I would say for the midterm, short to midterm, it's kind of messy to me, so I'd rather stay out of the Aussie currency until overall, I'm still actually, my bias is still short. Yeah, so wherever my bias changes, unless price actually breaks this particular level, does something like that, then I'll change to a long bias. Other than that, I still have a strong bias. Yeah, so I'm keen to see if price will actually hit this particular level and see if it actually travels downwards again. So keep a lookout for that particular scenario. But as of now, I would rather stay off the Aussie currency. Now the Swiss is interesting. You can see that after staying below for quite some time, finally it broke above the horizontal level, and this is actually a pretty strong level. You can see from the past. Yeah, this level has been interacting nicely with the Swiss. So what happens is that it might be a potential false break. You can see this is what happens. It has happened twice in the past, and it's actually not that really long ago. Yeah. So as such, keeping in mind that the Swiss doesn't really, it's not displaying a particularly strong downtrend or uptrend. It's really on a wide range. Yeah. So I don't really recommend jumping into any trades in the middle of a range. Yeah, so we shall see what happens if price actually does interact with this level. I'm hoping that it interacts, then it will actually shoot downwards again. That's where I'll be interested for a shot. Other than that, I would rather be staying out. But the British pound is interesting. You can see again, 120 is a really strong level, been rejected several times in the past. And the current week and the previous week price action, you can see there is a bearish bar followed by a rejection bar. Yeah, overall, definitely it's at the downtrend. So that's why it's actually more the bottom half of my list. I would say that it's showing weakness, just not a dominant weakness. Yeah, I'll be keen to see what happens on Monday and Tuesday, especially on the 4-hour time frame or the day time frame. If it imprints another rejection bar to the downside, I'll be keen for a shot. Yeah, but if it's displaying some sort of consolidation in day time frame, I'd rather be staying out of this pair. DXY, look. Is on a dominant uptrend. So, but this 2-bar has not been showing me a very clear-cut rejection level. I mean, I can say that it's a test bar, just that it's not very clear-cut. Yeah. So it is worth for a long position if I were to have some sort of bets, but in current stage of, I would say, unclear situation, I'd rather be staying out of dollar pairs for a time being. It seems to be consolidating for a fair bit. Now the yen, to me, dominant downtrend, very nice. It doesn't have a high, lower, low structure. Just that you can see that price break, retested, bearish bar, and followed by a rejection bar. So my money is on yen, still gonna be weakened. It has strengthened for the past 3 weeks, yeah, but it seems to be coming back to terms with its dominant downtrend. Yeah, so yeah, it's on weakness. Then the last on my list will actually be euro. Again, a very nice level. It has interacted. You can see that it bounced off 100, come back to this midterm horizontal level, and then a very nice rejection bar. Yeah. So on my list, CAD and Kiwi will be the strongest. Yen and Euro will be the weakest. So as such, for the upcoming week ahead, I'm looking to short Euro CAD. Euro CAD, when I zoom out, you can see that it's actually on a very nice sideways movement. So we can. If there's a setup here, then we got plenty of space to actually take profit to this level. Should easily give us at least a 3:1 if it happens. Again, I'll be cautious with this particular setup. Yeah. So because it's not exactly at the top or bottom of the range, but it's in the middle. So even if I have to risk it, it will be half a risk for this particular setup. And the next on my list will actually be Kiwi Yen. Now Kiwi Yen, I will actually caution some sort of patience. Again, this is a very, very strong horizontal level. I do not recommend trading straight into this particular level. Let's wait for price to actually break this level. A break and retest will be warranted, and then we can actually jump in for a long position. So that's all for me from this week.
Cheers, Lloyd. Thanks for that. Lloyd, of course, couldn't come to us live today, and I've got to go back to my childhood to think of excuses that I made why I couldn't do my homework or get to school on time, or all sorts of things like that. One was, the dog chewed my homework up, or it rained and I fell in a puddle, or whatever the case may be. Lloyd tonight, or this evening, he's at a ghost festival. Really? And he's playing a ghost. Interesting. Haven't heard that one before, but that wraps our Sunday weekly market updates. And thank you very much for joining us. As always, keep your trades safe and have a wonderful week ahead.